Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to another live stream. So we're going to take a look at the chart of the silver price, see what it's telling us today, and long story short, it appears that we may be approaching a major breakout, but we're going to look at the chart. I also want to cover some of the potential catalysts for a major breakout outside of the technical picture, outside of the charts that may kind of confirm what is headed, what is ahead for the silver price, where the silver price is headed. So first of all, just zooming into the daily chart here of silver, you can see that we are still in the midst of forming a bull flag chart pattern, consolidation pattern, following the major breakout which kicked off earlier this year. Also, you can see that the trend line of that breakout remains intact. And that trend line, along with this green line here, which is the 50-day exponential moving average of the price of silver, they both seem to be serving as major support. I mean, you can see if we zoom in, every time this line gets touched, price of silver bounces nicely. And if you just look at the, where these lines kind of finish up forming here on this bull flag, you should see that by really the end of June, I think we're going to get an idea of where silver is headed, whether that be a breakout or whether that be a renewed decline. But it looks like it's bottoming to me here. Also, keep in mind, this does technically look like a good entry point, but when we go over some of the catalysts today that could be driving the price of silver higher, and I think it'll really just take one of these things, you'll realize that now is an entry point, I think a viable entry point for getting your hands on some physical, especially if you don't have that core physical holding, the wealth outside of the banking system, the physical silver, physical gold as well in your hand. If you'd like to get some of that before the big breakout occurs, you can check out today's video sponsor, SD Bullion. This is where I buy my gold and silver, and these are on sale right now, these $50. I've been stacking these for a while. I've done some unboxings recently. You've seen these. I think that these still remain one of the best deals on physical silver, especially when they go on sale like this. If we go to the sell page for SD Bullion, right now they're paying under $1 under spot for these things. I mean, this is such a buyer's market. It's crazy. If you remember back in March of 2023, they were buying this stuff for way over spot. So the fact that the premiums on junk silver have come down so much, one, I think you can attribute it to the fact that people are just hurting and they need to raise money, right? So stackers may be selling their coins. But I like to do the opposite of what the crowd is doing. So I think now is a good time to be accumulating these things, because if any of these scenarios play out that we're going to cover, well, the premiums are likely to move a lot higher, especially on junk silver. It's not financial advice, of course. I'm just kind of giving you my thoughts. So today we're seeing a little bit of green in the price of silver. This is due to unexpected, quote unquote unexpected by the analysts, I guess, the folks at Dow Jones, an unexpected weakness in the consumer spending. So retail sales only rose 0.1% in May. They were expecting 0.2%. And you have to also understand about these retail sales numbers. These numbers are not inflation adjusted, right? So it's just people aren't buying more stuff. It's not like a strong retail consumer out there going out and buying TVs and computers and couches and all this stuff, racking up consumer debt. No, they're tapped out already. I mean, consumer credit card debt is at a record high, well over $1 trillion. But what is happening is that the prices of things continue to rise. So any economic strength that we see here in this number is really just a reflection of rising prices, not of a strong consumer. And yet 0.1% was weaker than anticipated. And so we see a rise in the price of gold and silver. The idea being here that a weak consumer, a weak economy means that the Fed is going to have to cut rates sooner rather than later. Someone in the chat here, Mauricio Rodriguez, says, just a random question, but what's happening with silver? Should we be buying for a catastrophe? Well, I am, if that helps you. I can't tell anybody out there what to do specifically, but we'll go over some news here. I've got several stories queued up, so, sit back, make yourself comfortable. Do me a favor, smash the like button and participate in the chat. I'll be keeping an eye on the chat throughout this live stream. But yeah, Joe Potter, he says food, fuel, and rent is sucking up his dry powder. Exactly. I think that part of the reason that we are seeing some softness in the retail silver products is because consumers and stackers, everybody is just getting squeezed. So, if you're in the club that can still be adding to your stack at this position, you just be at this point in time, just be grateful for that, and take advantage of the fact that you got some spare fiat, because I don't think the fiat's going to buy much for very much longer. Here's a story. 87 Ukrainian drones strike Russia in overnight attack. Now, what does this have to do with silver, you might say? Well, geopolitical uncertainty certainly will drive interest in risk assets like gold and silver, but specifically, these drone strikes were targeted at oil infrastructure, which is pretty significant for the price of silver. You can see some images here in the background of a fire that was created by these drone strikes on oil tanks. Now, Russia remains a major oil and natural gas exporter. Ukraine has been targeting their energy infrastructure. You can see this is in the town of Azov in southern Russia. Large fires following drones setting fire to these storage tanks. The price of crude oil today is actually significantly in the green as well. If we zoom this out to the 5-day period, you can see that oil has been on quite a run for the past week. And a lot of this has to do with this geopolitical uncertainty in Eastern Europe, these strikes on Russian oil infrastructure, and of course, the devaluing of the dollar as well. Oil is priced internationally in dollars. Sorry to those who think that the petrodollar ended on June 9th. Not the case. Not saying the petrodollar is going to be around forever, but Saudi Arabia is still pegging their currency to dollars. They're still selling their oil in dollars last time I checked. So the price of oil is set to rise because of the diminishing purchasing power of a dollar. Now, yeah, the dollar against foreign currencies, you look at the dollar index, is doing well, but it's just the healthiest patient in the terminal ward, so to speak. And the price of oil, I think, is going to be moving much higher. And that means likely the price of all commodities, because in some way, shape, or form, just about everything is tied into crude oil in one way or another. If you want to dig silver or gold out of the ground, if you want to grow food, if you want to transport goods, all of this stuff relies on petroleum. So the price of petroleum, where that goes, other commodities will also head in that same direction. Now, in the Red Sea, this is also going to be a significant inflationary catalyst. The ongoing strikes by Houthi rebels on shipping. So this is the most recent report I've seen from Reuters from 2 days ago, where a Houthi military spokesperson said that the militant group had fired ballistic missiles at an American destroyer, naval missiles at a ship called the Captain Paris, and drones at a ship called the Happy Condor. It's not clear whether any of the targets were hit. Now, the Houthis are kind of full of bluster. They will claim success when likely, it wasn't the case. Maybe their missiles get shot down. Maybe a U.S. vessel gets struck here at some point. We wouldn't necessarily know, right? But they remain a thorn in the side of anybody attempting to ship goods through the Red Sea, a critical shipping lane. And so as we see the cost to insure goods around the world, shipping them rise as a result of this, as we see shipping times increase because of ships avoiding the fast route and going for the safe route, we're going to see that lead to a rise in the price of just about everything. Now, we've got another story, just in case you thought that the Houthis were all bluster. This one is from a maritime blog. Crew safely evacuated from bulk carrier hit by Houthi attack. So this was the bulk carrier Tutor, which was hit on June 12th in a strike. I believe what the Houthis used to attack this particular vessel was actually a drone boat, a surface vessel loaded with explosives. And they detonated it against this carrier, which had to subsequently have its entire crew evacuated. So they've been transported to Bahrain. Luckily, it looks like everybody made it out okay from what I understand. But it's only going to take a major event in the Red Sea or in the Middle East, to draw us into a bigger conflict there. Of course, there's no peace agreement that has been reached in the Middle East, and so still there's a significant risk of escalation, and any escalation like that will likely drive the price of risk safe haven assets much, much higher. Moving on to the subject of international conflict. We've got Putin praising Kim Jong-un's support for the Ukraine war. Now, Putin is headed to Ukraine, or he's headed to North Korea here to meet up with Kim Jong-un, the North Korean leader. These two have become very close recently, and we just kind of continue to see the battle lines draw here in the international conflict, which is looming. We've got North Korea allegedly sending millions of artillery shells to Russia to use in Ukraine. Now, of course, NATO and our allies like in South Korea, yes, this is live now to those in the chat asking. We see them complaining that North Korea is supplying Russia with weapons. I mean, it seems kind of like the pot calling the kettle black to me, because, I mean, you just have these two blocks basically waging a proxy war. I mean, it's getting very close to being a direct conflict between NATO and Russia and its allies, but just another sign of escalation, really, is the thing to take away from this, I think. And the closer we get to a direct NATO-Russia conflict, the closer we get to a global economic crisis. This is just another headline from North Korea. They have really been militarizing the border recently, already heavily militarized, zone there between, or the demilitarized zone, I guess it's called, but heavily fortified region between North and South Korea. They've been installing new barriers, new landmines, all sorts of protective measures in the north, which shows you that they're getting ready for something. And they're laying these mines, and some troops there had a casualty event. I guess a mine went off or something like that. And, we'll probably never know exactly what occurred. However, again, just another sign of escalation. And we know that North Korea, South Korea is very likely going to be a hotspot in the coming conflict. And to show you that, this conflict will have far-reaching economic repercussions once it really breaks out. Yeah, I see that, Joe Potter. When all else fails, they take you to war. And that's right. So that is 100% correct. We're seeing a breakdown of the global financial system. I don't think that it is a coincidence that we are on track towards, what may very well be World War III. Unfortunately, that is just the track that we seem to be on. Now we've got this guy, the NATO chief, Jens Stoltenberg. He's visiting Washington to celebrate the 75th anniversary of NATO, and he has warned China of economic repercussions for their assistance of Russia in this conflict. So this is his quote. He said, President Xi Jinping has tried to create the impression that he is taking a back seat in this conflict to avoid sanctions and keep trade flowing. But the reality is that China is fueling the largest armed conflict in Europe since World War II, and at the same time it wants to maintain good relations with the West. Now, again, I mean, it's hard not to see what one might characterize as hypocrisy here. This guy complaining about China fueling the armed conflict in Europe. But anyway, I mean, I'll kind of leave it at that. But then he says Beijing cannot have it both ways. At some point, unless China changes course, allies need to impose a cost. There should be consequences. And what he's talking about is sanctioning China for their support of Russia. Now, China says that they're not providing lethal support. They're providing, perhaps some economic assistance. Who knows? I mean, they might be sending weapons there. Nothing would surprise me at this point. But should we engage in economic warfare with China? I mean, it could be bad for China, I guess, but it could be pretty bad for us, too. I mean, if you thought that the Putin price hike following the invasion of Ukraine was bad, wait until you see what happens when China gets sanctioned. I mean, we don't buy a whole lot of stuff made in Russia here in the U.S., at least. I know that in Europe they were buying a lot of gas and fuels and things like that, but I mean, China is the manufacturing plant of the whole world, more or less. And if you like, going on Amazon and buying things, you like buying things at Walmart, that'll all come to a rapid end should this occur. Not to mention the degree to which we depend on them for things like, pharmaceuticals, things that you need more than maybe, the tchotchke stuff on Amazon or, the cheap plastic crap at Walmart. But I mean, there's some very important things that we depend on China for. So I think threatening sanctions there, that is something that could easily come back to bite us in a very serious way. We run these enormous trade deficits. What the U.S. likes to export is debt, right? China at least is sending us real stuff. And if that comes to an end, well, we won't get to take advantage of our ability to run these massive trade deficits anymore. And we might find out just how dependent on them we have become. Here we go. So stepping aside from the international conflict here, we've got a former CIA chief warning that the U.S. faces a serious threat of terror attacks. So, I mean, look, if something like this happens, then yeah, you're going to want to have some safe haven assets, but that could be the least of your worries, right? Although, should this maybe something that might be looked at as not a minor attack, but, something serious, but sometimes it's the response that is actually the real problem. I mean, we've witnessed this in recent years, that sometimes the crisis isn't the real problem. It's the response by people and our authorities and leaders to whatever crisis occurs that can be the real problem. So, look, this guy is Michael Morell. He's a former CIA director who was under Obama, but he was also a briefer under George W. Bush. He's actually the CIA briefer who briefed the White House during 9/11. So, I mean, this guy knows a little about terror attacks, and he says the United States faces a serious threat of terrorist attacks in the months ahead. So, I mean, it gets he wrote that in Foreign Affairs, but, it's a very clear warning, and I think that this is something that we need to be aware of as we head towards an election. As Joe mentioned earlier in the chat, when all else fails, they take you to war. Well, look, sometimes the best way to take you to war is an attack, right? So maybe one of those FF attacks. Just research the Gulf of Tonkin, for example. I mean, the burning of the Reichstag. There's a lot of these incidents throughout history, and nobody has a monopoly on this stuff, but it's something you got to be aware of, right? Now, here's something interesting. Now, look, prepare to be triggered, okay? I try not to get political on this channel, but this was something that I thought was worth addressing. So this is Trump has been floating this idea of significantly cutting taxes in different ways, right? So recently I saw a talking point where he was discussing getting rid of payroll taxes. Yeah, I mean, that's good, right? Sounds good to me. Recently, he also floated the idea of eliminating the U.S. income tax. Okay, so far so good in my book. Replacing it with tariffs on imports. Okay, so that's his plan. Now, interestingly enough, before the Federal Reserve was created and then subsequently the income tax instated in the U.S., it's actually how most of the government was financed, was through tariffs. So there's some historical precedence for that. But we are in the midst of a massive economic crisis in the country right now. I mean, this tells you the story right here. $34.8 trillion in debt. We've got the most recent Treasury statement here. Last month in May, $347 billion deficit. Okay, so here's the thing. For those of you who believe that this economic crisis can be solved in the ballot box, I have bad news for you. Because if Donald Trump eliminates the income tax, now I don't even know that he would be able to do that. I mean, the president doesn't have authority to repeal, constitutional amendments and to completely change the way taxes are done. But let's just say he's able to do it. There is no way that his government, he will have any ability to cut spending to the degree necessary to offset the decline in revenue, because tariffs will not bring in as much cash as the income tax. I think it would be better if we financed everything through tariffs, personally, and we got rid of the income tax. I think it's one of the worst, policy decisions that has ever been pulled over the eyes of the American people here. I believe that progressive income taxation is one of the foundations of communism laid out by Karl Marx. Correct me if I'm wrong, put it in the chat if you know, but I know that a central bank is one of them as well. But look, I mean, cutting the U.S. income tax and getting rid of payroll tax and then failing to cut spending, the way that we would need to, it'll be an absolute economic disaster. I mean, that means that all the spending will simply be financed via deficits. And I mean, with the income tax, we've got a $347 billion deficit last month. So imagine what will occur to deficits if they get rid of the income tax but fail to cut spending. I mean, it'll be inflation on a scale the likes of which you've never witnessed before. Now, yeah, in the chat here, the Ubuntu Zealot, he says taxation is theft. I would agree with that, but inflation is a tax. So, you can't just stop taxing people and then finance everything with multi-trillion-dollar deficits, because that will just tax everybody the worst way possible through the hidden tax of inflation. So, sorry to throw cold water on anybody who thinks that, all we got to do is hold out to November and the whole debt crisis will be resolved with the outcome of an election. It's not going to happen, okay? So, I mean, and there might be other reasons to vote one way or the other, but fixing the economy, I don't see anybody who's really proposing the type of cuts that would be necessary to resolve this without massively devaluing the dollar. Let's see, we got silver, as I mentioned, from a technical standpoint, still on the verge of a breakout, it seems like to me. Silver up 23.57% year to date. So silver is, performing pretty well. Had a little bit of a consolidation here. I just like to point that out. People tend to get kind of turn into gloomy gusses when you see a little bit of a consolidation and pullback in the price of silver. I mean, I see it in the comments on these videos. Silver's still up 23.57% though. Anyway, yeah, Snug says reset not happening. Yeah, I mean, maybe there could be some kind of a debt jubilee or something like that. I mean, I think at this point that's what would be necessary. But see, that would be an honest default. That's really what we're in need of at this point. But we're not going to get it. Instead, we're going to get a default by inflation, which is much worse because it means that the currency gets destroyed. They'll never do an honest default, though, because if they were to debt jubilee, if they were to default on the debt, it means that they'd have to stop borrowing, right? And I don't think that anybody will ever make the responsible decision, any of the political elites or leadership, to actually cut spending the way that it needs to. They want to live in modern monetary theory, la land, and just, magical thinking. We'll just print enough money and everything will be fixed. Let's see, what do we got here? We've got PIMCO warning of more U.S. regional bank failures. This is from last week, but I thought it was worth taking a look at because, of course, we are on the verge of a major conflict, a major war. There is an economic debt crisis brewing in the U.S., but also we have a very, very distressed banking system. The problems of March of 2023 were really just kind of papered over, bailed out. Nothing was addressed. And now you've got PIMCO expecting more regional bank failures in the U.S. because of a very high concentration of troubled commercial real estate loans on their books. They say that the real wave of distress is just starting because these loans are now reaching maturity. As stressed loans grow due to maturities, however, we expect the banks will start selling the more challenged loans to reduce their troubled loan exposures. Now, one of the reasons that this is such a big problem is because they have been kicking the can down the road with the debt maturity on these commercial real estate loans, and they've been extending them, but now that's getting to the point where I think there's close to $1 trillion of these maturing this year, and they can't kick the can down the road any longer. So they're going to have to begin selling them, as they say. Now, the problem with that is we've seen what happens when the banks are forced to take a loss on properties like this. This is the chart of New York Community Bank Corp, and it was back in January, the end of January, the beginning of February, when they announced, I think it was $2.5 billion of losses from selling their troubled commercial real estate assets. And look what happened to their share price. It went from over $10 to now they're trading at $3. So, that's a huge loss. And it was looking like they might completely fail, but they got a bailout from, who was it? Steve Mnuchin, the former Treasury Secretary or something like that. I might be conflating some roles there, but he came in with a group of private investors and pumped some billions of dollars into it and fixed things right up. It's so transparent what's going on here, really. So anyway, yeah, I mean, further bank failures will certainly trigger a flight into safe haven assets. Specifically, that's when you really want to have the physical metal for. And the reason I say that is because we all saw what happened just last year. I mean, it was a little over a year ago in March of 2023. As soon as the banks started to fail, bullion dealers, local coin shops, everybody started to sell out of retail products right away. And it's just a little foreshadowing of what is to come. Of course, now it remains a major buyer's market. I mean, people are selling their bullion, but that's going to change immediately, I think. And, it might not be the mom and pop who are getting squeezed by inflation who really drive a lot of that when the crisis really hits. I mean, it's going to be people who have millions of fiat dollars and they can't find anywhere safe to place them, right? So they're just going to be looking for anything that they can hold in their hands. And some of the first things they're going to go for are the 1 ounce silver coins, the junk silver, the 1 ounce gold coins, maybe the gold backs. I don't really recall what happened with them in March, but seems like something nice to have if you can't trust the paper currency. But look, we're starting to see a little bit of public interest. We've got Costco. They're carrying these silver coins now. They've got Silver Eagles and Canadian Maple Leaf coins. But, we're nowhere near a peak in the metals. There's a reason that I think that there's still a tremendous amount of room for gold and silver to move higher from here, and why a breakout is, potentially right around the corner. A lot of what has been driving the metals thus far has been central bank buying for gold and industrial use for silver. They need a lot of silver in China to make all the solar panels that they're building. China's been buying up gold. If you recall, sell-off that we had recently, a lot of that was driven by the fact that China took a break for 1 month from buying up gold. They're probably, been buying the dip the whole time. But look, private investors, retail investors, really have a pretty subdued interest in the metals right now. So there's a lot of people who can flip. We see silver at Costco, but it's not going to be until you see gold and silver coins at like the checkout at your at your convenience stores. When you start seeing cases with gold and silver coins and, the price has gone way up and the premiums are up, that's when you'll know you're in a mania phase, right? And that probably is coming in the relatively near future because right now they've been doing a pretty good job of damage control on people's perceptions of what's going on in the financial system, right? They say, oh, it's strong, everything's fine, the fight against inflation is fine, but when they start cutting rates and inflation doesn't come back down, and then who knows, maybe politicians get rid of the income tax and drive the deficits through the absolute roof. I mean, there's a lot of things that could happen here. Or, we start sanctioning China and that leads to a global financial collapse. All sorts of catalysts that are potentially in the future for us here. But that's when you're going to see the real spike in interest in gold and silver, and that's when you're going to want to have it. Someone in the chat here says, you've been a bit slow on your releases. Well, sorry about that. I mean, I'm doing my best. Yeah, Doc says gold in vending machines. Yeah, when you see gold in vending machines, silver in vending machines, that's going to be a time to consider selling some of your holdings. 100%. I would agree with that. But we're nowhere near that. In fact, even the hardcore stackers are selling. That's why premiums on junk silver are low right now. And look, I remember in March of 2023 when the premiums were exploding, a lot of people got very upset about that. They said, oh, the greedy dealers trying to gouge us on the premiums that they're charging. But look, that's all supply and demand. Right now, premiums are low. Now is the time to buy, not to sell. If you ask me, I'm not telling anybody what to do, but that is how I look at things. When you see premiums exploding on certain bullion products, well, maybe it's time to lighten up on them then. But not now when everybody else is, right? You want to sell into a wave of intense interest, and that's the sort of thing that could happen should we get a major war, a financial crisis. Anyway, Art Joe Go says, Goldback's already in the works for vending machines. Well, that's interesting. I hadn't heard that, but If you start seeing vending machines that accept goldbacks, it probably means that we're in the middle of a hyperinflationary crisis. So you probably don't want to sell your gold at that point. You probably just want to use it for trade so that you have some real money. But that's interesting. Toxics Therapist says that they have a goldback ATM machine in Miami, Florida. Wow. I've never heard of such thing. Hey, thank you very much, Animal Black, for the super chat. I want to say just a big thank you to all of you for jumping in on these live streams, especially those who, support the channel, but just anybody. Look, if you want to support this channel, just do me a favor, smash the like button. That's all you got to do. We're about 30 minutes in. If you're still watching at this point, you must have gotten something out of this video. So love it, hate it. If you want to see more of these, smash the like button, subscribe to the channel. And that's pretty much it for today, everybody. We got to keep an eye on silver. We are approaching the end of this pattern, this bull flag pattern. It looks like, we got a few more days to go before we get a breakout one way or the other. But I'm betting on a breakout to new highs. That would mean, I saw somebody ask me for a time prediction. Now, look. Timing the market, I'm not suggesting that anybody take any action based on my, forecast here on YouTube. But if I had to say, I would say that by sometime by mid-July, we may be breaking out of this. I think the next run up is going to take us to $35 plus. You can see that we've had several of these consolidations since this run up really began in February. Had a consolidation here, getting another consolidation here. This trend line remains intact, so look, now is looking like a good time to add to positions. Of course, if it breaks down, if some other catalyst leads to, pan sell-off, a deflation, a decline in the price of silver, a dollar cost averaging physical, it's no big deal in the long term, So keep an eye on this. I will do my best to give you some updates moving forward, and I will catch all of you next time. Thanks for watching, everybody. Stay safe and happy stacking. Share the video with your friends. Leave a comment down below, and I'll catch you next time. Smart Silver Stacker out.